Good morning, students, and welcome you again in the third and the last class on Ind AS 36 impairment of assets. So, students, in the last two classes, we have covered lot many concepts on impairment of assets. And today we are going to cover two important concepts on impairment of assets. One is corporate asset allocation, and the second one is reversal of impairment loss. Before that, as a protocol, so let me again reiterate, let me again revise the entire two sessions in the next 10 to 15 minutes, and then I will take forward the today's agenda, the topics from the today's session, right? So friends, we started impairment of asset standard in two classes back. So friends, first of all, what we have covered so far in impairment of asset, we understood that the objective of this standard is to know any asset in the balance sheet should be recognized, should be continued at more than their recoverable value. Means, for example, the carrying value is 100 rupees, but the recoverable value is 80 rupees. In that case, the revised carrying value is 80 rupees and 20 rupee has to be depreciated. Right? This is what we discussed. Friends, Ind AS 36 says that you need to check whether there is any indication of impairment. If indication of impairment exists, then only you need to estimate the recoverable amount, recoverable value. There could be internal indicator of impairment, there could be external indicator of impairment, right? There could be two kind of indicator, internal indicator, external indicator. Internal indicator means those indicator which are arising within the organization. External indicator are those indicator which are arising outside the organization. Means, for example, there is a change in technology, there is a government announcement, change in legal and economic environment, right? So decrease in market capitalization, increase of interest rate. So these are the external indicator. So whenever there is an indication of impairment, whenever there is an indication of impairment, you need to estimate the recoverable value. You need to estimate the recoverable value. Okay. So what you need to estimate? You need to estimate the recoverable value whenever there is an indication of impairment. Okay. Friends, we also discussed while estimating the recoverable value is the higher of fair value less cost to sell and value in use. Fair value less cost to sell and value in use. Okay. What is meant by fair value less cost to sell? Fair value less cost to sell is a value which you will receive if you will be ready to sell the asset in the market. Means fair value is a market value. What is a cost to sell? Cost to sell is a cost of disposal. When you want to sell your asset, you have to incur some incremental directly attributable cost also. You have to incur some incremental cost. For example, cost of specialized packaging, for example, selling commission, stamp duty, legal charges. So whatever cost you are incurring after taking a decision to sell, to facilitate sale, that will be considered as a cost to sell. In your cost to sell, finance cost and income tax should be ignored. Finance cost and income tax should not form part of your cost of disposal, right? So we compute fair value less cost to disposal. And the second leg is value in use, right? So how will you receive the future economic benefit? You will receive the future economic benefit either through selling the asset or by using the asset. If you want to use the asset, right? When you want to use the asset, then what happened? In that case, if you want to use the asset, you have to get the cash flow. You have to incur some cash flow, cash inflow and cash outflow. So what is the value in use? Value in use is the present value of future cash flows. This is the meaning of value in use, right? So we need to estimate the future cash flows and then we need to discount those future cash flows to arrive at a present value, because we are comparing the current carrying amount with the recoverable amount as on today, as on date. Friends, while computing the cash flows, and of course, while computing value in use, it's a accounting estimate. Why? Because when you are estimating cash flows, again, it's an estimate. It's not a reality, it's an estimate, best estimate. When you are computing discount rate, again, it's an estimate. Again, it's an estimate. So these two are the estimates. Okay. So friends, these both are the estimates. So while computing the discount rate, what is the discount rate? It's an incremental borrowing rate. And what is your cash flows? What is your cash flows? Your cash flows are inflows as well as outflows. These are inflows as well as outflows, right? Sir, what do you mean by inflows? Means when you will use the asset over the life, okay, then you will get some inflows. So those inflows are the cash flows which you need to consider. When you will generate inflow, you have to incur some outflow also. You also need to consider those outflows. Sir, for how many period? For 5 years. But you can take a longer period if the longer period can be justified. Okay. Sir, do we need to also consider terminal cash flows? For example, residual value, answer is yes. So you need to consider cash flow from continuing use of asset and cash flow from disposal of asset. Okay. Sir, do we also need to consider future cash flows when we want to expand in future, we want to invest in some new technology, and by investing in a new technology, we will be able to save some future cost as well. So do we need to consider the future investment in technology, the future saving of the cost? Answer is no. You need to estimate the cash flows in the current condition, Okay. Sir, if we are estimating cash flows and we have the valuation report, which is issued by the valuer, valuation report or projected report by the valuers, and the management themselves has also done some projection. Sir, which value we should consider? That whether that valuer report or the management estimate? We need to consider valuer report, external report, because we have to give more weightage to the external evidence. So these are about the cash flows we need to consider. We need to discount those cash flows using a discount rate, and then we will arrive at a present value of future cash flows. Okay. Sir, what happens if the cash flows are arising in the foreign currency? Because my asset is lying in the foreign currency. So friends, standard says that you have to compute value in use in the foreign currency. Means I have to estimate my cash flows in the foreign currency. I have to apply the discount rate. In the foreign currency. Okay. I have to apply the discount rate in the foreign currency, means discount rate applicable to that country. And then I need to discount and and I'll get the value in use as per foreign currency. Now, since you are comparing your carrying value with the recoverable value as on date, in that case, you need to convert the foreign currency cash flows using a spot rate for the conversion. This is how you will get the INR recoverable value. And then you need to compare INR recoverable value with the INR carrying value. And if the recoverable value is lower than the carrying value, then there is an impairment loss. I hope this is clear. Yes. Friends, then what we have discussed? Then we discussed impairment loss is required to be charged to the P&L until and unless impairment loss is incurring if the asset is on a revaluation model. If the asset is on a revaluation model, then whatever impairment loss is there, first you need to adjust the impairment loss with the revaluation surplus, if any. If the revaluation surplus is not there, then entire impairment loss will go to P&L. If limited revaluation surplus is there, that revaluation surplus has to be adjusted and then remaining impairment loss needs to be charged to the P&L. Okay. Right? Clear? Okay.
Yes, sir.
Then we discussed, sir, we need to check the impairment loss on a specific asset if there is an indication of impairment, right? But there are three assets from a single family. There are three assets from one family which requires estimation of recoverable value, which requires impairment testing, irrespective of the fact there is indicator, there is no indicator. I mean to say, there are three assets where the compulsory mandatory impairment testing is there, mandatory estimation of recoverable value is there without checking the impairment indicator. Which are these three assets?
Experience one,
Intangible
unplanned
assets.
baby, and outsider.
So
Means the
Sanjay, you are also explaining something?
Yes, intangible assets not yet available for use, and goodwill acquired in business combination, and intangible assets with indefinite useful life.
Yes. So three assets from the intangible asset family. Intangible asset not yet available for use. Intangible asset having indefinite life. Intangible asset which is related to goodwill. Goodwill arising in business combination. Goodwill. And of course, it's a purchased goodwill. You are right, Saminathan, it's a purchased goodwill. So friends, we have covered that aspect of, these three assets are required a compulsory impairment testing at least once annually, at least once in a year. And standard says that whatever is the time period you choose for impairment of these assets, so you can choose any time period. It is not necessarily required to be carried out on the reporting date. But whatever impairment you will do, whatever time you will choose, it has to be consistent from one year to another. For example, today is 6th September. If today you are doing an impairment loss in the month of, if today you are doing an impairment testing, today you are estimating recoverable value for an intangible asset, these three intangible assets, in the month of September 25, again in the next year you have to carry out in the month of September 26. Okay, right? So the time frame, the interval has to be consistent. Friends, then we came to the cash generating unit. So first you need to check the impairment at an asset level. If impairment at asset level cannot be, if the recoverable value at asset level cannot be computed, cannot be measured, in that case you need to check that this asset belongs to which group. What is the minimum group of assets to which this asset belongs? And we need to combine, we need to attach this asset to a group of assets, and then we will compute the recoverable value of the cash generating unit. Recoverable value of the cash generating unit. Okay. So friends, and cash generating unit, what is a cash generating unit? It's a what? Cash generating unit is the minimum, is the smallest identifiable group of assets which can generate cash flow independently. For example, in case of a telecom companies, have you seen the telecom tower?
Yes.
Have you seen telecom tower?
Yes, sir.
Yeah, you must have seen the telecom tower, right? So this is the telecom tower. These are the antennas which are there on the telecom tower, right? Have you seen those antennas in the telecom tower? You must have seen there is a DG set, there is a generator, DZ. There is a diesel generator, okay, which is below the telecom tower. There are some batteries also. There are some other assets also, right? So this entire site is known as a telecom tower site. This entire site is known as a telecom tower site. Okay, telecom tower site. Friends, if you see the balance sheet of a telecom tower company, and typically if you see the fixed asset register of a telecom tower company, they capitalize the tower separately. This is the tower, telecom tower. Okay. Then they capitalize the diesel generator, okay, separately. They capitalize the batteries separately. And there are some other asset like SMPU, SMPS, right? APU, SMPS, etc., etc. There are some other assets also. Okay. Now the question is, yes, the fair value is determinable for all these assets, right? Because these assets are purchased assets. So fair value to pata hai. But tell me one thing, whether this generator independently as a single asset, whether this generator is able to generate cash flow,
No.
whether this battery is able to generate cash flow,
No.
whether this tower independently without any source of power supply, without any generator, without any battery, without any SMPS, without any APU, whether this tower is able to generate revenue.
No. No.
So absolutely no. So tell me whether value in use can be computed, value in use can be determined in case of tower, in case of battery, in case of diesel generator.
Not independently, but as a unit, cash generating unit.
Yes, very good. So that is why, my dear friends, if you see the balance sheet of the telecom tower companies, in many balance sheet you will found, when I say balance sheet means their financial statements, okay? You will found they consider telecom tower site as a cash generating unit, because when all these assets are put together, they are generating cash flow. They are generating cash flow. Is that clear? Is that very much clear?
Yes, clear.
Yeah. So this
Clear,
is known
clear.
as a cash generating unit, and that telecom company have thousands, lakhs of tower sites. They have thousands of towers. So every tower site is a cash generating unit. Okay. These are the smallest identifiable group of assets which can generate cash flow independently, right? Okay. So if you are not able to determine the cash flow for individual asset, you need to determine the cash flow for cash generating unit. Now you computed cash flow for you computed the recoverable value for the cash generating unit, and when you computed, you found that recoverable value of the cash generating unit is lower than the carrying amount of the cash generating unit. Now what you will do? You will recognize impairment loss, right?
Yes.
So
Right.
for example, 100 rupees is the value of the cash generating unit, carrying amount. 80 rupees is the recoverable value of the cash generating unit. Now you have a 20 rupee of impairment loss and you have multiple assets in the CGU, and these assets are capitalized in fixed asset register separately. You have the value, you have the carrying amount. So how will you allocate the impairment loss on cash generating unit into multiple assets? Neha, I want answer from your side. Tell me, how will we allocate the impairment loss on cash generating unit? Yes, Neha.
Sir, I missed.
Sorry.
Sir, I missed your question.
So my question is, there is an impairment loss on cash generating unit, right? So how will you allocate the impairment loss on cash generating unit?
Sir, allocation of impairment loss.
Yes.
Yes, sir. First, we will adjust with the goodwill, and after that, we will allocate with the other cash generating unit.
Other assets. Okay. So
Yes,
first you will adjust with the goodwill. If the goodwill is there, then you need to adjust the goodwill, and whatever impairment loss is left, right? You need to allocate that portion of impairment loss in the proportion, in the ratio of other assets of the cash generating unit. Okay.
yes.
One thing you need to take into consideration while allocating the impairment loss on other assets in the pro rata basis, right? While allocating impairment loss on the pro rata basis to the other asset, you cannot allocate the impairment loss on those assets where the individual impairment loss is not there. Have you understood what I'm trying to say? Let's say if you will compute impairment loss individually, you have found that on that asset there is no impairment because the recoverable value of a particular asset is more than the carrying value. Okay. So going by an individual item of the asset in the cash generating unit, there is no impairment. But the impairment is coming just due to allocation. Should we allocate impairment to that asset?
No, sir.
No, absolutely no. Or going individually, that asset has an impairment loss of, let's say, 2 rupees. But when you're allocating impairment loss, it is coming out at 5 rupees. So will you charge impairment loss on that assets to the extent of 2 rupees only, or will you allocate 5 rupee?
Sir, 2 rupees.
2 rupee. You cannot allocate impairment loss on a particular asset more than the individual impairment loss on that asset, right? So whatever amount is remaining, that amount has to be adjusted in the remaining other assets and the pro rata basis, right? While allocating the impairment loss. This is what we discussed, allocation of impairment loss in the cash generating unit, right? Yes. And friends, we have also discussed the concept of deferred tax asset and deferred tax liability in case of impairment loss. Impairment loss is an expense which is not allowed under Income Tax Act, right? So in the textbooks, your value is always higher. In case of impairment loss, your carrying value will go down because you have charged an impairment loss, you have credited your asset. ठीक है ना? Your value will go down in the company's books, in the books of accounts, in the balance sheet, your value will go down. Your revised carrying value will go down. But in the income tax books, your value is always higher. Higher क्यों होगी income tax में?
सर क्योंकि इनकम टैक्स एक्ट जो है रिटर्न डाउन वैल्यू पे कैलकुलेट कर रहा है.
Income Tax Act ignore the concept of impairment loss. In the CA final curriculum of income tax officer, right? जो income tax के officer हैं, उनकी books में impairment of asset का standard नहीं है. Okay? That is why they don't know what is impairment of asset. They say, my carrying value is 1,000 rupees, right? Your carrying value is 1,000 rupees. My carrying value is also 1,000 rupees as per my computation of depreciation. Now you have allocated impairment loss of 400 rupees. Then your revised carrying value will become 600 rupees, but my carrying value will still be 1,000 rupees. Okay. So in case of impairment loss, your tax base, your tax value will always be more than your books value, right? Then what you will do? You have to increase your asset. Which asset? Deferred tax asset.
Deferred tax asset.
Deferred tax asset. And deferred tax asset to the extent of the difference between the tax value and the book value. Multiply by tax rate. Okay. This is what we discussed. Yes or no? We did
Yes.
2-3 complex questions along with some other questions in the impairment of asset standard. So this is the Sarans, this is the Gita Sar of last 2 days class. I hope you found this revision useful. Yes?
They're very useful.
Yeah. Okay. So friends, now let's start the journey of the today's concept. Let's start the journey of today's concept. Today, we have 2 big concepts to discuss. Concept number 1 is corporate asset. Can you tell me what is meant by corporate asset?
Sir, corporate asset is the asset which is used for the administration purpose. Say example.
Yes.
For example, if we have the building, manufacturing is there, and manufacturing building is there. For that, definitely the future economic cash flow will generate out of that. For that asset which are using the manufacturing, the administration purpose, that is called corporate asset. but which will not generate any cash flows out of it and on its own. But on the combined basis, it will generate. So, so now the question is that how we are going to identify the value of the corporate asset in the group CGUs concern. That
Right,
is a question we are going to study now, sir. Thank you.
right. So absolutely right. Every organization has two type of asset. Have you heard the word cost center and profit center?
Yes.
Yeah,
Yes,
cost
sir.
center,
Yes.
profit center. So probably in your articleship days, you have heard about these words and you have seen these kind of things in your companies. You know, so who we are in terms of our profession, who we are. We all are chartered accountant. Yes or no?
Yes.
Yes, sir. Future
Yes.
auditor.
Yeah. You guys are also chartered accountant, right? And believe me, if you guys are saying yourself that we are CA student, so stop saying that. So what you should say every morning when you will wake up, what you should say?
I am a
We
chartered
are,
accountant.
we are chartered accountants.
Yes, I am a chartered accountant. And I'm telling you from my last 20 year of experience, I am telling you. Right. So you should say, I am a chartered accountant. Don't say I am a CA final student. So, hey God, please help me in clearing the CA final examination. No, you should say I am a chartered accountant. When you go to your bed in the night, before sleep, you should say, I am a chartered accountant. Don't say, I have cleared my CA final examination. I become CA. Say, I am a chartered accountant. Okay. Your study table, where you are studying, just write and put a paper, paste a paper that I am a chartered accountant and I'm enjoying my life and I am working in a great company, right? And I'm enjoying my life. If you want to start a practice, please write. So I have opened my firm and my firm is running great. It is doing great. If you want to come into teaching, you should say, I am a chartered accountant. I am a renowned teacher of financial reporting or XYZ subject, right? So you should say, you should write. And this process is called as what is the name of this process?
Manifestation.
Manifestation. This is a manifestation. It works because the universe has a lot of power. Okay. Yes, now coming back to our topic, profit center, cost center. We all are chartered accountant. Being a chartered accountant, what is the department in which we will join the company? Which department?
Finance department.
Finance department. And you know, finance department is considered as a profit center or cost center?
Cost center.
Cost center. So we are cost to a company. If you, and there is an MBA who has done MBA in sales and marketing, right? When he join a company, what is the department he will join?
Marketing, sales and marketing.
Sales and marketing. And whether he will be called as a profit center or cost center?
Profit center.
He will called as a profit center. We will called as a cost center. Right. So he will called as a cash generating unit. We will called as a corporate asset. Right. So friends, tell me one thing. We are the cost center and sales and marketing is the profit center. But whether sales and marketing will be able to facilitate sales without the cost center, without us?
Yes,
No.
sir. They can independently work, sir.
No. So my question is different. Can an organization be able to run without finance department?
No.
No, organization will not be able to run. So who is telling to the sales and distribution that what is your debtor sale outstanding ratio? What is your outstanding receivables? What is the aging, right? How much of revenue is recorded, right? What is the outstanding amount at the end of the year? So who is giving all those financial MIS? Finance department is giving all those financial MIS, right? In the company, there is a billing department, there is a revenue department, there is a accounts receivable department. So these are sitting under finance department. These are the finance people, accounts people. Okay. So friends, these cost centers are mandatory. These are important. Without these cost center, profit center cannot be called as a profit center. Do you agree with me or you agree to disagree?
Agreed, sir.
Agreed, no?
Agree.
So friends, likewise, these cost centers are important for the profit centers. Okay. While as we are the cost center, we are not directly involved in generating revenue. We are not directly involved in generating sales, right? We are directly not engaged in the sales, but we are helping the organization in taking a decision, throwing a data, giving the MIS, giving the financial statement. Okay. So we are helping the organization. So the point is, likewise, in organization, there are factory building and there are office building also. What is the purpose of the factory building?
For manufacturing goods.
For manufacturing goods and services, for manufacturing goods. And what is the purpose of the office building?
Administration purpose.
Administration purpose. In the office building, you guys are sitting, you are doing audit, you are preparing the financial statement, you are preparing MIS, you are filing tax return. You are not doing any job by which the company can generate revenue. Yes or no?
Yes, sir.
So you are the compliance function. You are preparing financial statement. You are just ensuring no penalty will come, no interest will be charged, right?
Yes.
You are ensuring those things, but you are not contributing to the revenue from operations or the other income of the company. Correct?
Correct. We are supporting the.
You are supporting. So in this case, this factory building is the profit center. Office building is the cost center. Factory building is the cash generating unit, right? It is the smallest identifiable group of asset which can generate cash flow. Yes or no?
Yes.
Yes.
Sir.
Yes. But office building is not the cash generating unit. Whether office building is generating cash flow?
No, sir.
Answer is no. Office building is not generating any cash flow. So now the question is, sir, if the office building is not generating cash flow, it is not possible to determine the recoverable amount of the office building. Sir, should I left this office building for testing impairment? So the
No.
entire value of the company is going down. The rate of interest is getting higher. Okay. And the office building, which is located in an area, so the government has blacklisted the area. There are a lot of trespassers activity, a lot of snatching, robbery. Due to that, the value has significantly gone down for this office building. But we can't compute recoverable value. So do we need to charge impairment on this office building or not?
Yes, sir. We have to charge.
We need to charge, but the question is how we can charge. In the first scenario, we have discussed that if the recoverable value, if the computation or measurement of recoverable value on an individual asset is not possible, then you are attaching that asset to the group of assets which can generate cash flow. You are attaching this asset to a group to which this asset belongs. Yes? Yes or no?
Yes. Yes.
Yes, sir.
Yeah. So this corporate asset, this office building is not generating cash flow. This office building measurement of recoverable value is not possible. Then what you will do for this office building? Impairment testing. You need to attach this corporate asset to the CGU. Whatever CGU is there. For example, in an organization, there are 5 cash generating units. For example, there are 5 factory buildings. There are 5 factories. And to manage the operations of these 5 factories, there is 1 office building. Okay. So how many cash generating units are there?
5.
5. Let's say the value of this corporate asset, office building, is 100 crores. So you will allocate the 100 crore rupees value into the 5 cash generating unit. So this corporate asset become part of the cash generating unit. So you will attach this corporate asset with the cash generating unit of the organization. Is that clear? How we will do that? I will explain. Is that clear as of now?
Yes,
Yes,
sir, clear.
okay.
Everybody is clear? Profit center, cost center. This is a corollary. This is a kind of analogy which I have drawn to make you guys more understand. Okay. So corporate asset are the assets other than goodwill that contribute to the future cash flows of both the CGU under review and the other CGU. The characteristics of corporate assets are that they do not generate cash flow independently of other assets. Hence, the recoverable amount of an individual corporate asset cannot be determined. Therefore, recoverable amount is determined for the cash generating unit to which the corporate asset belongs and is compared with the carrying amount of the CGU. How we will do this? Allocation of impairment loss on the corporate asset. Let me discuss with the help of a question. Yes, illustration number 8. So we will discuss this corporate asset allocation with the help of illustration number 8. Right? Shall we solve this illustration?
Yes.
Yeah.
Yes, sir.
Okay.
Yes, please.
Earth Infra Limited has 2 cash generating unit, A and B, CGU A, CGU B. There is no goodwill within the unit's carrying values. Very good. The carrying value of CGU are CGU A for 20 million and CGU B for 30 million. The carrying value is given for CGU A and CGU B. The company has an office building which it is using as an office headquarters and has not been included in the above values and can be allocated to the units on the basis of their carrying values. So this company has a corporate asset. What is the corporate asset?
So which is used for the administrative purpose.
Administrative purpose. The company has a corporate asset which is office building, right? And question is saying the value of this office building has to be allocated in the ratio of what?
Carrying value.
In the ratio of carrying value of the CGUs, right? On the basis of their carrying values. The office building has a carrying value of 10 million. So it means this 10 million has to be allocated to
20 and 30.
20 and 30. So this 10 million has to be added to 20 and 30, okay, in the ratio of 2:3. The recoverable amounts are based on value in use of 18 million for CGU A and 38 million for CGU B. The recoverable amount is also given. The recoverable amount is given, right, for CGU A and CGU B. Determine whether the carrying value of CGU A and CGU B are impaired. We need to determine the carrying value of CGU A and CGU B. Okay. Shall I solve this question? Okay. On the Excel file? Yes. Yes, sir. Why not? I hope my Excel file is visible to everyone.
Visible, sir.
Visible.
Visible? Fantastic. Yes. So what concept we are going to discuss right now? We are going to discuss the allocation of impairment loss. This is the concept we are going to discuss. Okay. So let me give you the steps first and then I will solve the question. Okay. Illustration number 8 of ICAI study material. And what is this illustration? This illustration is about what is the concept? What is the concept of
Corporate assets.
allocation of corporate asset and impairment. This is what we are going to discuss, right? With the help of illustration number 8, correct? Okay. Now I'll give you some steps of allocation of corporate asset and impairment, right? And let me put the step before this illustration. What are the corporate assets? Corporate assets are those assets which does not generate cash flows independently. Okay. And hence the measurement of recoverable value is not possible, right? So the value of these assets are added to the carrying values of the CGUs, okay, of the CGUs on a systematic basis, to compute the recoverable value of CGUs after including corporate assets, right? Okay, this is the concept. Now example. A Limited has an office building for rupees 100 crores and 4 factory buildings for rupees 50 crores each. 50 crores each. Advise what will be the value of the CGUs and how office building is allocated to the CGUs, right? This question is clear to all of you? Is it clear?
Yes.
Yeah?
Yes.
So here, how many CGUs are there in this case?
4.
4 CGU. Factory 1, 2, 3, 4. These are the 4 CGUs, right? What is the value of the CGU?
50 crore each.
50 each and 200 is total.
50 crores. Okay. What is the corporate asset value?
100 crore.
100
100.
crore. So how this 100 crore is allocated? In how many CGUs? In all the CGUs.
4.
So this corporate asset is allocated in the ratio of what?
Carry value on the systematic basis.
So systematic basis means what? In the proportion, in the ratio of the carrying value. So 100 divided by 50 divided by 100 multiplied by 50 divided by 200, right? So shall I do 100 by 4? And let me do 100 divided by this divided by this. Okay. Equal to 100 multiply by this divided by this. Equal to 100 multiply by this divided by this.
25 each.
You know why I'm doing this kind of calculation? Just to help you guys after 3 months, when you will forget that it is systematic basis pro rata or not, right? When you see this calculation, you will be able to remember, right? Carrying value post including post including corporate asset. This plus this. Right? Clear?
Clear.
Is that clear?
Clear.
With the help of this example. Now I'm giving you the steps, right, of allocation of corporate asset and computation of impairment. Step number 1. What is my step number 1? What we have understood so far. Step number 1 is allocate the corporate asset in the ratio of the CGU. Step number 1. Step 1. Allocate the corporate asset in the ratio of CGUs. What is my step number 2? You need to allocate the corporate asset in the ratio of CGU. Step number 2, what we have done? Calculate carrying value of CGU after including corporate asset value, right? Calculate, revise, carrying value of CGU post inclusion of what?
Corporate assets.
Corporate asset, right? Step number 3. What is my step number 3? Compare the total carrying value. Compare the revised carrying value in the step number 2 with recoverable amount. Compare the revised carrying value. कौन सी revised carrying value? Step number 2 वाली. Compare the revised carrying value with the recoverable value. Recoverable. Then calculate impairment loss if any. When you compare, you will find whether there is an impairment loss or not, right? Calculate impairment loss if any. Calculate impairment loss if any. Right? If there is an impairment loss, allocate impairment loss in CGU and corporate asset in the ratio of their carrying value, right? Allocate the impairment loss in CGU and corporate asset in the ratio of their carrying. How many of you have understood the steps? How many of you have understood the steps?
Yes, understood.
Sir, I have understood, but I have one doubt, sir.
Okay,
Sir,
so your doubt will be cleared. Not to worry, Vibhu. So your doubt will be cleared automatically. So tell me, how many of you have understood the first 4 steps, but haven't understood the step number 5? How many of you? So please be clear, right? Be transparent. So I am surprised if you guys have understood all the steps. And I'm not getting the answer from the other students. Chitra, have you understood? Yes, Chitra has said understood. Neha, Akshay, Naman.
Understood, sir.
All the steps. 1 to 5.
Probably.
Okay. Yeah. So let's solve illustration number 8 now to crystal clear our understanding. Let's solve illustration number 8. What was the facts given in the illustration number 8? Do you remember or you forgot those steps? The corporate asset was given for 10 million, right? So there was a value of corporate asset which was given in the illustration number 8. Corporate asset. This was given. Corporate asset was given. What was the value of the corporate asset?
10 million.
And then 2 CGU was also given, na?
Yes.
Carrying value of the CGU was given, na? Carrying value.
Yes.
Carrying value of what? Carrying value of CGU A
A and B.
CGU B.
20 and 30.
And what was the value of those CGU 20 and 30?
30.
This was given, okay? And recoverable value was also given in the question.
Yes.
What was the recoverable value given?
18 and 38.
18 and 38. Recoverable. I think these three facts are given in the question, right?
Yes.
18 and 38.
38.
These three facts was given in the question. Okay. Now we need to apply the steps. We need to apply the steps. Kare apply?
Yes.
Yes. Let's apply those steps. Sorry. Any question?
No, sir. No, sir.
Yeah. Particulars. Then your CGU A. I hope my Excel file is visible to all of you.
Yes, sir. It's visible, sir.
CGU B. Right. CGU A, CGU B. Total. Let's go step by step. Let's go step by step. What is the carrying value is given? What is the carrying value which is given? Carrying value which is given is carrying value. What is the carrying value? 20, 30, and total. Right. Now, what is my step number 1? Mera step number 1 kya hai? What is my
Allocation
step
of
number 1?
allocation of corporate assets to A and B.
Allocate the corporate asset in the ratio of A to B. So corporate asset allocation, right? What is the value of my corporate asset? Kya value hai corporate asset ki?
10 million.
10 million. So I need to allocate 10 in the ratio of what? 10 multiplied by
6:3.
20 divided by 50. 10 multiplied by 30 divided by 50. Yes, the total is 10. Okay. Now, what is the step number 2? What is step number 2?
Recoverable amount. We will compare with recoverable amount. and
Step number
check
2,
impairment
revise
loss.
carrying value. Revise carrying value. Step number 2, carrying value. Revise carrying value post corp. What is my step number 3? Recoverable value. Compare with recoverable value. Step number 3, compare the revised carrying value with the recoverable value. What is my recoverable value?
18 and 38.
$18 and $38, right? 18 and 38. What is my step number 4? What is my step number 4?
Impairment loss. Check impairment loss.
Now I need to compare step 2 and step 3 to check my impairment loss. Yes or no?
Yes.
Yes. So tell me, impairment loss hai ya nahi?
Yes. In A, it
Yes,
is
sir.
there.
CGUA.
Yes. In CGU A, what is the impairment loss? Carrying value 24,
6
recoverable
million.
value 18. In CGU B,
No impairment loss.
no impairment loss. In CGU B, no impairment loss. Have we reached to step number 4? What is my step number 5? What is my step number 5?
Allocate impairment loss.
Allocation of impairment loss, step number 5. allocation of impairment loss. Allocation of impairment loss. Okay. Yes. Allocation of impairment loss in the ratio of what? In the ratio of
Carrying value.
CGU and corporate asset. In the ratio of CGUA and corporate asset. In the ratio of CGU and corporate asset. Okay, CGU and corporate asset. And how can I do that? How can I do that?
20:10. That,
CGU, first of all, allocation of impairment loss. CGUA excluding corporate asset and corporate asset. So tell me, what is my carrying value of CGUA? What is my carrying value of CGUA?
20.
20.
Without corporate asset, 20. Very good. You all are brilliant. What is the carrying value of corporate asset
4.
10.
in CGUA? In CGUA,
4.
4, right? आपका CGUB में तो there is no impairment loss ना? In CGUA, the total carrying value of CGUA is 24. In 24, what is the value of corporate asset? What is the value of CGU? 20 and 4. I hope this is clear to everyone.
Yes, sir.
Right. Now, what is allocation? How much impairment loss you will allocate? 6 multiply by 20 divide by
24.
24. 6 multiply by 4 divide by 24. So this is the allocation of impairment loss. This is the allocation of impairment loss on this CGUA and the corporate asset. Now, can you tell me what is the revised carrying values? Now, what is the revised carrying values of CGU and corporate asset in the balance sheet post impairment? Can you tell me what is the revised carrying values of CGU and corporate asset in the balance sheet post impairment?
CGUA is 15 crore. Corporate asset 9 crore.
So what is the earlier carrying values? The earlier carrying values were these were the earlier carrying values. Okay. Right. Now, what are the revised carrying values? Now, revised carrying value of corporate asset कितनी होगी? बताओ तो सही.
Carrying
10 में
value
से
minus impairment loss.
9 million. Rest 10 minus 1, 9 million. What is the impairment loss? What is the revised carrying value of CGU A and B? On CGU A, 20 minus 5 na? 15 crore.
Yes, sir.
CGU B, 30 minus what?
0.
30 minus 0. 30 minus 0. Right? So these are the revised carrying values. Bibhu, Akshay, Naman, Chitra, Saminathan, Sanjay, Leela, Neha, let me know if anyone have any question. And I believe after this question, the concept is crystal clear. So first I have explained the concept, then explain the meaning, then a small example, then I have written the steps, and then I have solved this illustration number 8. I hope you guys are absolutely clear on this corporate asset allocation and computation of impairment loss and computation of revised carrying value. Let me know if you have any question.
Can you explain last step again? I missed something.
Which
The
one?
last step. Last step, yes.
Revised carrying value
Yes.
or step number 5?
Impairment, no, allocation of impairment loss.
Yes. So let me explain again. Not to worry, for everyone, this is an important concept. Let me explain again. So, friends, have you understood the concept of the corporate asset? Very much?
Yes.
Very much. You all have seen your offices. You all have seen the factory building. You all have seen the office building. You all have went for the audit and you have seen that they are not selling goods. They are just working in the back end to help to support the company, right? So now you understood the concept of the recoverable value, right? So first of all, what we should do, this office building is for the entire company. And the company, the organization is bifurcated into the CGUs, cash generating unit. So first you need to allocate the corporate asset in the ratio of the carrying value of CGU. Step number 1. So once you allocate it, then you add. Then you find out what is my revised carrying value after including corporate asset, right? You will have the revised carrying value. Then you will compute the recoverable value of those CGU. Then you will compare the revised carrying value with recoverable value. You will find either impairment or no impairment. Like in this question, you will find impairment in the CGU A. Now, what is the recoverable value of CGU A, Sanjay? 18.
18.
18. What is the revised carrying value of CGU A, Sanjay? 24.
Carrying 24.
24. 24. And Sanjay, what is the carrying value of CGU A and the corporate asset in this 24 million? Sanjay, what is the breakup of 24 million in CGU? What is the breakup of revised carrying value of 24 million? 20 million is the
20 and 4. 20 and 4.
20 and 4. 20
yes.
is for CGU A and 4 is for corporate asset.
Right.
यहाँ पर किसी को कोई doubt?
No doubt.
No doubt. So now you have the 6 million of impairment loss. So now you need to allocate the impairment loss because your office building is stated as a separate item in the balance sheet. It is separately coming in the fixed asset register. तो आपको impairment loss तो allocate करना पड़ेगा ना जैसे CGU में करते थे.
Yes, understood. That is understood. Yes.
So this 6 million you have allocated in the ratio of 20:4. Then it came at 5 and 1. So this is how you computed the revised carrying value after impairment, right?
Right.
So corporate asset is 9 million, CGU A is 15, CGU B is 30 million. Okay.
Right.
Clear? Very much clear?
Clear.
Absolutely clear?
Yes, absolutely clear.
Great. Fantastic. Awesome. Right.
Sir, we get recoverable value for separate assets A and B. Does it include the portion of corporate asset? Because
of course, yes. Right. So even if the question is silent, you should assume that this recoverable value is the value in comparison to this in the revised carrying value. Okay.
Okay, sir.
Any other doubt? Sir, example of a centralized warehouse where a company has multiple units in all different directions of the country, a central warehouse for its distribution network. It will also be considered at corporate asset?
Absolutely, yes. Yeah, okay. Is that right, Akshay?
Yes. And the second point, one more question. If question straightforwardly expressly says that a corporate asset is to be proportioned in different CGUs on the basis which is given in the question. Likewise, we are taking it on a proportionate basis of recoverable value. Question says that 50% of it is dedicated to CGU A and 50% in CGU B. Then what we have to do?
Sanjay, Akshay, when I was explaining the concept, I have used a word on a systematic basis, right? On a systematic basis. So in that case, of course, when the question is telling you that, this corporate asset is dedicated 50% to CGU A, 20% to CGU B, and 30% to CGU C, right? So you have to allocate the value of the corporate asset in accordance with the rule which is given in the question. Absolutely in that. Okay. Irrespective of the fact, when you go on a pro rata basis, it is coming out, let's say, so we have allocated 50, 20, 30. But even though if we will go by pro rata, it will be coming at, let's say, 10, 20, and 70. Still, we will go with 50, 20, 30. Right?
When we are in a position to recognize the proportion, we will do with that in what we have given in the question.
Yeah. So basically, not in a position. You need to check, Sanjay. Is there any criteria which is given for allocation? If answer is no, then what is the best criteria?
Yes.
Pro rata.
Which is
Pro rata in the proportion of the carrying value of the CGU, right?
yes.
Yes. As you know, as I also told you, you remember in Ind AS 8 there is a concept. And what is the concept? Whenever you are making an accounting policy, you have to refer a specific standard. If specific standard is silent, then you have to draw an analogy from the similar standard, right? So what we have done in CGU allocation, impairment loss allocation on CGU, pro rata. So the best is pro rata. Okay. But if the question is given some other criteria, of course, that will prevail over pro rata. Right? So friends, we have covered the concept of this corporate asset allocation also, right? So now we have the concept of what? So now we'll take a concept of reversal of impairment loss. I hope this is clear to everyone. Is that clear to everyone? Yes or no?
Yes, sir. Clear, sir. Yes.
Very much?
Very much.
Clear? Clear with clarity?
Yes.
Yes, sir.
Clear with clarity.
Clear with clarity. Yes. Now the concept is reversal of impairment loss. And after this concept, we'll cover 3-4 questions as well, right? So friends, we have recognized the impairment loss. So can we reverse that impairment loss in the subsequent period, in the subsequent years? Tell me, answer is yes or no?
Yes.
Yes, sir.
Answer is yes. So tell me one thing. If we have recognized an impairment loss on the purchased goodwill, right? So can you reverse the impairment loss on goodwill?
No, sir. We cannot reverse it, sir. Then if you are reversing it again, then it will be treated as a internally generated goodwill.
Absolutely yes. So you cannot reverse impairment on goodwill. So this concept is given for the asset other than goodwill, right? So reversal of impairment on goodwill is prohibited. Why? Because as explained by Saminathan, so reversal of impairment loss on goodwill is like recognition of internally generated goodwill. Recognition of internally generated goodwill, which is prohibited by Ind AS 38, right? And hence it is absolutely prohibited, right? Okay. So friends, impairment loss recognized in prior period should be reversed when there is an indicator. When there is an indicator. कौन से indicator? कौन से indicator?
External indicators, internal indicators.
कार के indicator. No, Sanjay. Not external, internal. Which indicator? The car indicator. कार में कौन से indicator होते हैं? दो indicator. Left and right.
Left and right.
So here also there are two indicators, left and right, external indicator and internal indicator, right? You are right, Sanjay. So I was just pulling you. Okay. So external indicator and internal indicator. What could be the external indicator? For example, market value has increased significantly. There is a significant favorable change in technological, market, economic or legal environment. Interest rate has been dropped, repo rate has been dropped, interest rate has been dropped, right? What is the internal indicator? Significant favorable effects in the use of the asset. Economic performance of the asset is better than expected. These are the kind of internal indicator, right? You remember we have discussed this indicator in detail with the examples.
Yes.
So reversal of those unfavorable indicator is considered as a favorable indicator. Okay. If the indicator exists, you need to estimate the recoverable value and you need to reverse the impairment loss. You need to reverse the impairment loss. Okay. Correct? Is that right? Is that right?
Right.
But how much should be the reversal? How much should be the reversal? The point is, how much should be the reversal? Friends, the reversal of an impairment loss shall not exceed the carrying amount that would have been determined had no impairment loss been recognized for the asset in the prior years. Right. Reversal of impairment loss for an asset other than goodwill shall be recognized immediately in profit or loss. Any reversal of an impairment loss of a revalued asset shall be treated as a revaluation increase in accordance with other Ind AS. कौन सा other Ind AS? Ind AS 16, Ind AS 38. Further depreciation will be charged on the revised carrying amount. So friends, can I have a break for 10 minutes now? Because today I'm not feeling well. I have a stomach ache. I have a stomach infection. So can I have a break for 10 minutes
Yes.
right now instead of giving it later on? Yeah.
Sure,
Yes.
sir.
Yeah. So Ashok ji, break for 10 minutes. Okay. I hope my Excel file is visible. No? Is it visible now?
Yes, sir.
Okay.
Sir, visual, sir.
Yeah. So now we are discussing reversal of impairment loss concept, right? Reversal of impairment loss. And whomsoever haven't understood anything on reversal of impairment loss, not to worry. You will be able to understand everything on reversal of impairment loss after completion of this example. Okay? Right, Bibu?
Okay, sir. Yes, sir.
Yeah. Reversal of impairment loss. Friends, when we need to reverse? So reversal of impairment loss on other asset is allowed if there are favorable indicators, right? So reversal of impairment loss on goodwill is not allowed. Okay. So reversal of impairment loss on goodwill is not allowed. What about reversal of impairment loss on other asset? Reversal of impairment loss on other asset. When is allowed? कब होगा? When there are
Indicators.
which indicator? Favorable
Favorable.
indicators. और impairment loss कब करोगे आप impairment testing कब करोगे? Recoverable amount कब estimate करोगे? When there is an unfavorable indicator.
Favorable.
So here there is a favorable indicator, right? There is a favorable indicator. Reversal of impairment loss on goodwill is not allowed, and reversal of impairment loss on other asset is allowed if there are favorable indicators. Okay, if there are favorable indicators, right? So friends, now let me explain the concept of reversal of impairment loss. As we discussed, the reversal of impairment loss should not be more than had the revised carrying value would have been such and such, right? Forget about all those things. Let's discuss the concept of reversal of impairment loss. What should be the quantum of reversal of impairment loss with the help of an example. Okay. For example, the cost of the asset is 1,000 rupees. The life is 5 years. And what will be the depreciation? Example. Cost is 1,000 rupees. Life is 5 years. Tell me, doston, what is the depreciation per annum?
200.
200. 1,000 divided by 5. 200 rupees, right? With the given scenario, 200 rupees. Now tell me, what is my WDV? What is my carrying value at the end of year 1? What is the carrying value at the end of year 1?
800.
1,000 minus 200. What is my carrying value at the end of year 2?
600.
600. Okay. Carrying value at the end of year 2 is 600. Assuming the impairment loss at the end of year 2 is 300. Assuming impairment loss, there was an impairment loss. This carrying value at the end of year 2 is the after depreciation, right? Cost minus accumulated depreciation, correct?
Yes.
But what is the formula of carrying value?
Cost minus accumulated impairment loss.
Minus accumulated impairment loss. So impairment loss at the end of year 2 is 300. Is 300, okay? This is my impairment loss at the end of year 2, it is 300. What is my revised carrying value?
300.
300. यहां तक किसी को कोई डाउट? Any doubt up to this level? Any problem, any doubt, guys? Any doubt?
No,
No
sir.
doubt.
No. And now what is my depreciation? What is my depreciation for the year 3? What is my depreciation for year 3?
100.
300.
Simple.
300
What is,
divided by 3.
what is my carrying value divided by remaining useful life? So 300 divided by 300. So what is my carrying value at the end of year 3?
200.
Carrying value at the end of year 3. $200. Carrying value at the end of year 3 is 200. Okay. It is 200. What is my depreciation for the year 4? What is
100.
my depreciation for year 4?
100.
100. So carrying value divided by remaining useful life, 100. What is my carrying value at the end of year 4?
100.
100.
Yes. Now assuming, so your WDV, your carrying value at the end of year 4 is 100. Assuming at the end of year 4, there were some favorable indicators and the value has gone up to 180. The value has gone up to 180. Okay. So at the end of year 4, the favorable indicator exists and recoverable value has gone up to rupees 180. At the end of year 4, the favorable indicator exists and recoverable value has gone up to rupees 180. Okay. Friends, what is the carrying value at the end of year 4? 100.
100.
What is the recoverable value? 180. How much impairment loss we have recorded in the past?
300.
300. So what should I do? My carrying value is 100, recoverable value is 180, and of course I have 300 recorded, 300 impairment loss in the past. Should I reverse this 80?
Yes.
Yes, sir.
Revaluation surplus.
First of all, let me tell you, all of you, the reversal of impairment loss is not always only in revaluation model. It is on cost model also. Impairment loss can be reversed in cost model also by impairment of asset standard, not by PPE.
Yes.
Right? So
Yes,
if the
right.
question says that revaluation model is opted, then only you need to talk about revaluation surplus, blah, 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 blah. Right? Okay. So the reversal of impairment loss, even I have told you in India 16 also, for example, you have opted for a revaluation model, for example. And when you opted for revaluation model, there is a impairment loss. The value has declined. So first time you have recorded impairment loss. Subsequently, the value has gone up. Then what you did? You have not recorded revaluation surplus. You have first of all reversed whatever impairment loss you have recorded. You have reversed in the P&L. Then only if the increase is beyond the impairment loss earlier, then you are increasing, then you are recording the revaluation surplus. Right?
Right.
So we need to reverse the impairment loss. Now, what should be the quantum of reversal of impairment loss? So you know what standard says? Standard says that after reversal of impairment loss, the revised carrying value should be lower of recoverable value, and had the asset never been impaired, then what should be the carrying value? So what is the concept? Let me give you the concept. After reversal of impairment loss. So what we are discussing how much amount can be reversed. This is what we are discussing. After reversal of impairment loss, the revised carrying value क्या होनी चाहिए? The revised carrying value should be the revised carrying value should be what? The revised carrying value should be lower of मतलब जो रिवाइज कैरिंग वैल्यू होगी वो लोअर होनी चाहिए. किसकी लोअर होनी चाहिए? द रिवाइज कैरिंग वैल्यू शुड बी लोअर ऑफ नंबर 1 A recoverable value. What is the recoverable value in this question? In this example, what is the recoverable value?
180.
180. So recoverable value 180 and recoverable value and had the asset never been impaired, then what would be the carrying value? अगर ये एसेट कभी भी इंपेयर नहीं होता तो ईयर एंड 4 पे क्या कैरिंग वैल्यू होती? एट द एंड ऑफ ईयर 4 व्हाट वुड हैव बीन द कैरिंग वैल्यू? हैड द एसेट नेवर बीन इंपेयर्ड, had the asset never been impaired, then what would have been the carrying value? Had the asset never been impaired, what would have been the carrying value? Tell me, if this asset would never had been impaired, then what would have been the carrying value at the end of year 4?
200.
200, sir.
200.
Simple. At the end of year 4, 1000 rupees was my cost minus what was the depreciation? 200 rupees per annum, accumulated depreciation for 4 years, right?
Right.
For 4 years. So cost minus, this will be cost minus accumulated depreciation for 4 years. Is that clear or not clear? Is it clear or not clear?
Clear, sir. Clear.
Absolutely clear.
Absolutely clear.
Neha,
Yes,
is that clear? Chitra? सबको क्लियर और नॉट क्लियर? सबको कंप्लीटली क्लियर और नॉट क्लियर?
Clear, sir.
Yes. So in this case, what is lower? In this case, what is lower? Recoverable value is lower, or
Yes.
or had the asset never been impaired, what would have been the carrying value? What is that lower or recoverable value is lower?
Recoverable values.
Recoverable value is lower. Recoverable value is lower. Okay. So what is the accounting? What is the accounting entry at the end of year 4? What is the accounting entry? Now we need to, our carrying value is 100 and our recoverable value is 180. So what is the accounting? So my revised carrying value is what? My revised carrying value should be, क्या होगा?
180.
Lower of 180 and 200. Lower of 180 and 200. दोनों का lower क्या है? 180. 180. This is my revised carrying value. This is my revised carrying value, right? What is my accounting entry? Asset account debit. What is my accounting entry? At the end of year 4. Journal entry. Journal entry for reversal. Of impairment loss. At the end of year 4, journal entry for the reversal of impairment loss. What is the journal entry? Asset account debit. Asset account debit. To what?
Impairment loss.
To impairment loss reversal. To impairment loss reversal. Okay. To impairment loss reversal. कहाँ पे? In P&L. In P&L, right? Okay. If you have opted for a revaluation model, then you need to see the treatment accordingly. Even in the revaluation model, if there is an increase, so first you need to adjust with the impairment loss which has been charged to P&L. To that extent, I mean to say what can be reversed, right? So in case of impairment loss reversal, let's say, so in that case, even in case of a revaluation model, आपको adjust किससे करना है? पहले आपने जितना impairment loss P&L में book किया है, to that extent you have to record in the P&L. You have to record an income in the P&L. And beyond that, you have to take it to OCI. Beyond that, you have to take it to OCI. Right? Okay. So impairment loss reversal. How much amount?
80.
80.
80, sir.
Now, shall I add more complexity to this question, to this example? Shall I add more complexity to this?
Yes.
Huh?
Yes.
Yes, please, sir.
Take a different number for the recoverable value. Okay. Taking a different number of recoverable value, and assuming the recoverable value is 250. Assuming recoverable value is 250, then what?
Then we have to take 200 rupees as impairment loss reversal.
Again, let me make this chart for all of you. After reversal of impairment loss, the revised carrying value should be lower of recoverable value, which is 250. And had the asset never been impaired, what should be the carrying value? 200. So what is the revised carrying value in this case? 200.
200.
What is the accounting entry? At the end of the year 4, what is the journal entry for the reversal of impairment loss? क्या entry होगी?
Asset account debit
Asset
to
account
impairment
debit
loss reversal.
to impairment loss reversal.
Profit
Asset
loss.
account debit to impairment loss reversal. Asset account debit to impairment loss reversal 100. Shall I add more complexity?
Yes.
Suppose,
Yes.
sir, in the case itself, suppose if the revaluation model is opted.
So Saminathan, hang on. So I'm covering that. Yes. Now taking a different number, right? Taking again a different number, assuming. So let's say this is scenario 1, example, case 1, right? Case 2. Assuming recoverable value is 250. Case 3. Assuming the recoverable value is 350. Okay. Right. Assuming the recoverable value is 350 and the company has opted a cost model. ठीक है? Assuming the recoverable value is 350 and the company has opted the cost model. Now, tell me what accounting entry you will pass at the end of year 4. If the company has opted for a cost model, so one thing is very much clear. There is no revaluation surplus. है या नहीं?
Yes. No. There is
Right,
no
Saminathan?
here.
Yes, sir.
There is no reversal surplus. So again, after reversal of impairment loss, the revised carrying value should be lower of recoverable value. What is the recoverable value in this question?
200.
350.
350.
350. What is the value had the asset never been impaired? तो क्या value होती? Same 1000 minus 200 into 4, right?
Yes, sir.
यही होती ना. So what is my revised carrying value in this case? It will be 200 only.
Yes, sir.
Yes.
It will be 200 only. So what is the accounting entry?
Same asset account debit.
Same asset account debit to impairment loss. So by analyzing case 2 and case 3, one thing is very much clear. Doesn't matter what is your impairment loss. Doesn't matter what is your reversal of impairment loss, but your reversal should not exceed beyond the lower of two values, right? Means the revised carrying value should be lower of your recoverable value and your value which you need to compute. Had your asset never been impaired, what would have been the computed value, right? Now same example. Let me again take the same example. Case 4. Assuming the recoverable value is 350 and the company has opted a revaluation.
सर ऊपर अमाउंट 150 आएगा ना?
किसमें? यहाँ पे 100 की जगह?
Yes sir.
Why? So tell me one thing. In this case, the recoverable value is 350 and the company has opted a cost model, right? So what is lower? What is recoverable value? 350. And what would have been the asset value if the asset had never been impaired? 200. ये clear
200.
है? So lower क्या है दोनों में? What is lower?
Okay, yes sir, yes.
200. Is that clear now?
Yes sir.
And the WDV, the carrying value at the end of year 4 was 100 rupees, right? It was 100 rupees. Okay. So case 1 में यहाँ ले आता हूँ. ये basic facts था. ये case 1 यहाँ से आ गया, right? इसको ऐसे करते हैं. Case 1, case 2, case 3, case 4. Yes. What to do now? Assuming the recoverable value is 350 and the company has opted a revaluation model. क्या करें?
A reversal in revaluation surplus first. We'll adjust there. And then.
First of all, one thing is very much clear. In case of a revaluation model, whatever is the market value, whatever is the recoverable value, that will become the revised carrying value. Is that clear or not clear?
Yes, sir. In this case, the revaluation model, the over of recoverable value, and after that concept will not applicable. The thing is that.
Yeah. So Neha, is that clear or not clear? So in case of revaluation surplus, in case of revaluation model, will you check how much you will increase, how much you will not increase? Of course, whatever is the market value, whatever is the fair value, whatever is the recoverable value, that will become your revised carrying value. So that is clear to everyone, na? Or not?
Yes.
Yes. So what is my carrying value as of now? What is my carrying value as of now? 100. Carrying value was 100 ना, ऊपर से आ रहा है ना carrying value at the end of year 4. So what will be my revised carrying value?
350.
Revised carrying value is 350, right? Why? Because of revaluation model. है ना? देखो, I'm not doing this exercise. Why I'm not doing this exercise? Because I'm very much clear. I was doing that exercise to compute how much I can reverse. But here, I know that whatever is my market value, complete value I can take. Yes or no? So, yes, how much I need to debit in asset? What is the journal entry I need to pass?
Asset account debit 250.
Asset account debit. Samanathan, just hold on. After telling this entry, don't say the next entry. Okay. Asset account debit 250. Okay. You know, at times I'm getting very slow. Why? Just to make a curiosity and excitement, and then to get the answer from you guys and then give the answer, right? So that it will be printed in your mind. Asset account debit 250. Whether everybody is clear on this single entry, asset account debit 250? Yes.
Yes.
So I will write at the end of year 4 journal entry for reversal of impairment loss and revaluation and recognition of
Revaluation.
revaluation surplus. Asset account debit 252. To what?
Impairment loss. And
To
250.
impairment loss reversal. Impairment loss reversal. P&L. How much? Entire 250?
And 250. Because we have already 300 impairment loss.
Yes. So friends, you know what concepts we have discussed in Ind AS 38 and Ind AS 16. In case of a revaluation model, if there is any increase in the value, first you need to adjust with whatever impairment you have charged in P&L. To that extent, you have to reverse in P&L. So how much impairment we have charged in P&L?
300.
Sanjay?
300.
300, right? Impairment loss charged in P&L. In P&L in year 2. In year 2. What is the impairment loss charge in P&L in year 2? How much? 300.
300.
300, right? So we can charge to this extent, right? Now, case 5. Shall I do case 5 also?
Yes.
Yes, sir. It is needed now.
Case 5. Assuming the recoverable value is 450 and the company has opted for a revaluation model. Akshay, now I need the answer from your side. Tell me, what should I do? So carrying value was 100. Revised carrying value is 450. Your impairment loss charge in P&L in year 2 was 300. Now what at the end of year 4, what is the journal entry?
So the journal entry will become asset account debit.
Very good. Asset account debit, yes. How much will be asset account debit? 350, right?
350.
रुको एक मिनट, कंफ्यूजन ना हो इसके लिए I should make it at 500 or let's say I should make it at 400. Let's do it at 400. 3 नहीं 550 कर देता हूँ. Yes, 550. It is also 550. Yes. So I will increase my asset by 450, correct? Asset account
Yes,
debit
sir.
450, right?
Yes, sir.
To what?
To impairment loss reversal 300.
Very good. So basically what you are reversing, whatever you have taken in P&L, that you are reversing, correct? So this is what you are reversing. Okay, then remaining to
150 revaluation reserve,
revaluation reserve, revaluation surplus or revaluation reserve, OCI. Revaluation surplus, OCI.
150.
150. Thank you so much, Akshay. And you know, I love this batch completely because the kind of the participants in this batch, I haven't seen such kind of participants in my LVC experience, in my live classes experience. I never have, felt that. 1 or 2 participants are always there, but in this batch, the entire fleet of participants are absolutely great. So friends, whether this case 1, 2, 3, 4, 5, whether this reversal of impairment loss concept is reversed in your mind or clear in your mind?
Sir, clear in mind.
Clear in
Clear
mind?
in mind. Clear in mind.
I hope it is not reversed in your mind.
Not.
Okay.
No.
Okay. Right. So all the concept.
I think what you have taught us previously, it is just the replica of what you have taught us in PP and intangible assets.
Yes.
It is just a replica. If we get some logic, it is just a replica of what you have taught us.
Yes, you're absolutely right. You're absolutely right. Right. And believe me, my dear friends, you can just go through with these 5 cases, right? And your entire doubts will be cleared that agar ye hoga to kya hoga, wo hoga to kya hoga, right? So everything I've captured with the help of these 5 cases. Okay, right? And now you have understood in case of a reversal of impairment loss, how much you need to reverse, you need to check. How you will check? You need to check what should be my revised carrying value? And what is my revised carrying value? My revised carrying value should be lower of two values. Number one, recoverable value. Number two, so recoverable value will be given in the question, exam question, but or recoverable value, if it is not directly given, at least value in use will be given and fair value less cost to sell will be given. Then you will be able to compute recoverable value.
Yes, sir.
What is
Yes.
the recoverable value? It is higher of
Value in use or fair value less cost to sell.
it is higher of value in use and fair value less cost to sell, right?
Yes.
Right? It is higher of fair value less cost to sell and value in use. So you computed recoverable value. Then you need to compute what would have been the carrying value had this asset never been impaired. Then you will have a computed carrying value. Okay. Then you need to compare, and whatever is lower, it will become your revised carrying value. Then you need to compare. If my revised carrying value is 180 and my existing carrying value is 100, then I need to reverse 80. I need to reverse 80. Correct? So this is what you need to reverse now. You need to reverse only 80. So this is how you need to compute the amount of reversal of impairment loss. Fine, friends?
Yes.
Yes. Absolutely clear?
Absolutely.
Without
clear.
any doubt?
Without any
Yes.
doubt.
And
Yes.
once you have reversed the impairment loss, what will be your future depreciation? What will be your future depreciation?
The carrying value divided by remaining useful life.
Simple. Whatever will become your revised carrying value, you have to divide by remaining useful life. You have to divide by remaining useful life. Okay.
So if there is a residual value, then you have to reduce the carrying value on the carrying value. Then we have to put that remaining useful life.
Yes. Yeah. Now, friends, can we do an illustration? A big illustration from ICAI study
Yes.
on this concept. Shall we do that?
Yes.
Okay.
Yes.
Yes, sir.
So we have discussed the concept. We have discussed the 5 cases, examples, right? Now we are doing an illustration. Okay. Yes. Whether my PPT is visible or not visible?
No, sir, it's not visible.
It is not visible. Okay. Is it visible now?
Yes, sir. Case study.
Yeah. On 1st April 20x1, and please write down the facts, okay? Venus Limited acquired 100% of Saturn Limited for 4 lakh rupees. Okay. So Venus acquired Saturn for 4 lakh rupees. The fair value of the net identifiable assets of Saturn was 3,20,000. The fair value of the net identifiable assets was 320 and goodwill was 80. Okay. Saturn Limited is in a coal mining business. On 31st March 20x3, after 2 years, the government has cancelled licenses given to it in few states. Is this an indication of impairment?
Yes.
External indicator.
External indicator of impairment, yes. So the value of the asset was 320 and 80. 4 lakh is the cash generating unit. Value is the 320-80. As a result, Saturn Limited revenue is estimated to get reduced by 30%. The adverse change in marketplace and regulatory condition is an indicator of impairment. As a result, Venus Limited has to estimate the recoverable amount of goodwill and net assets of Saturn Limited on 31st March 20x3. Venus Limited used straight line depreciation, right? So this asset was acquired on 1st April 2001. Okay. So this asset was acquired on 1st April 2001. And this reporting date is 31st March 2003. Means after how many years it is talking?
2 years.
After 2 years. After 2 years they are talking, right? So whether after 2 years the values was 3,20,000 only on the asset value is?
No, sir. Depreciation.
Will be
For
Depreciation. So depreciation, and that is why that 20-year life is given, right? The useful life of the Saturn Limited asset is estimated to be 20 years with no residual value. Means On 320, you have to divide by 20. And what is the per annum depreciation?
16, sir.
16,000.
16,000. 16,000. 16,000. 16,000 is the per annum depreciation. Okay. So 2-year depreciation is how much?
32.
32,000.
32,000. So what is the carrying value of the net assets? Carrying value of these assets of 320 at the end of 2 years?
2,88,000.
320 minus 32.
2,88,000.
2,88,000.
88,000.
2,88,000. Okay. Yes. So Venus use straight line depreciation. Useful life of Saturn is estimated to be 20 years with no residual value. No independent cash inflows can be identified to any individual asset. Right? So the entire operation of Saturn is to be treated as a cash generating unit. Means 320 plus 80 is a cash generating unit. Right? Due to the regulatory entangle, it is not possible to determine the selling price of Saturn Limited as a cash generating unit. Due to the regulatory entangle, it is not possible to determine the selling price of this company as a cash generating unit. Its value in use is estimated by the management at 2,12,000. Its value in use is estimated by the management at 2,12,000. So friends, the value in use is given. Okay. So what is the recoverable value?
2,12,000.
2,12,000 is the recoverable value. What is the carrying value of that asset? 288.
288.
But it is a CGU. It is a CGU. So goodwill will also be captured there. Right? So 288 is the value of the asset. 80,000 is the value of the goodwill. Okay. So what is the CGU value?
3,68,000.
368. And what is the recoverable value? 2,12,000.
2,12,000.
So what will be your this thing?
Impairment
क्या
loss.
होगा आपका? What will be your impairment loss? Is it only 288 minus 212 or 288 plus 80 minus 212?
So 288 plus 80 minus 212.
क्या होगा बताओ?
Yes, sir. 2,88,000 plus 80,000 minus 2,12,000.
Any female candidate who want to answer? Any female candidate who want to answer? Whether the impairment loss is 288 minus 212, which is how much? Which is 212 plus 288. How much? 76,000, right? So whether impairment loss is 76,000 or impairment loss is 2,88,000 asset value plus 80,000 goodwill value, which is 368 minus 212, which is 1,56,000. Okay. So whether impairment loss is 1,56,000 or 76,000?
1,56,000.
1,56,000.
Chitra, what about you? Is it 156 or 76? Neha, what's your view?
Sir, 1,56,000.
1,56,000 because it's a CGU. आप गुडविल को तो बेच नहीं सकते ना. You will not say ना कि सर गुडविल की सेल वैल्यू नहीं पता. क्या सेल वैल्यू होगी? रिमेंबर मैंने बताया था गुडविल का कॉन्सेप्ट इम्पेयरमेंट का, राइट? So now we understood 1,56,000 is the loss. Impairment loss. Suppose by 31st March 20x5 means after how many years? After 2 more years. After 2 more years, the government reinstate the license of Saturn Limited. Which kind of indicator? Favorable, unfavorable?
Favorable.
Favorable indicator.
Management expect a favorable change in net cash flows. This is an indicator that impairment loss may have reversed. The recoverable amount of Saturn Limited net assets, the recoverable amount of Saturn Limited net asset is re-estimated. The value in use is expected to be 3,04,000. and fair value less cost to disposal is expected to be 290. What is my recoverable value?
3,04,000.
Why?
Higher of fair value less cost to disposal and value in use.
Higher of fair value less cost to disposal and value in use. Absolutely right. Absolutely right. Okay. 3,04,000 is the recoverable value. So how much impairment loss should be reversed? Let's do this question on the Excel file, right? Let's do this question on the Excel file. Will you help me with the facts?
Yes.
Okay.
Yes, sir. I can note down everything.
Illustration number 10. Illustration ICAI study material. It was illustration 10, right? Yes. Illustration number 10 of ICAI study material. Some facts are given. What were the facts? CGU. CGU is given, correct?
Yes.
And what is the value of the CGU which is given? So the initial recognition value, right? Initial recognition
4 lakh.
value. And what is my initial recognition value? My initial recognition value, there are two assets, Goodwill
3,20,000.
and other assets. What is my Goodwill?
80,000.
80,000 is my Goodwill. 80,000 is my Goodwill and 320 is my
3,20,000.
value of the asset. Four lakhs the value, initial recognition value. Just a minute. Now, what is the life? What is the life of the asset?
20 years.
20 years. So carrying value at the end of what? 31st March 20.
X3.
So what is the carrying value of the Goodwill?
80,000.
80,000, right? There is no life of the Goodwill is given. It is only for other asset. Okay. 320. So what is the carrying value of this? 320 minus how much?
16,000.
16,000. 320 minus 2-year depreciation ना?
Okay. Yes, sir. 32,000.
तो 16 कैसे हो गया? 320.
I was telling about 1 year.
अच्छा, you're telling about 1 year. Okay. 288.
288.
Just a minute. Okay. 368. Now, what is the recoverable value which is given? Recoverable value. Recoverable value दी थी ना क्वेश्चन में कितनी थी?
2,12,000. 2,12,000.
3 lakh 4,000.
उससे पहले भी तो दी थी 31st March 2023. 2,12,000. वो भूल गए आप लोग. Recoverable value is given 2,12,000. 2,12,000. Okay. So this is my recoverable value 2,12,000. Okay. So what is my impairment loss? What is my impairment loss? My impairment loss is how much? कितना होगा? 368 minus 212?
38 minus 212.
1,56,000.
So just allow me a minute, okay? Somebody is on the door. Yes. So 1,56,000. How this impairment loss is allocated? First to the
First we will allocate
Goodwill.
it to goodwill,
then remaining to the other assets,
remaining assets.
right?
In,
How much is the remaining? 76,000.
Yes.
156 हो गया. Okay.
Yes.
What is the breakup of the revised carrying value? So what is the breakup? Revised carrying value क्या हो गई? Revised carrying value. Revised carrying value. Value at the end of on 31st March 20x3. What is the revised carrying value? Carrying value plus impairment loss. Yes. Then again, carrying value plus impairment loss, and then this is the revised carrying value. Any doubt up to this level?
No.
No.
Any problem?
No, yes, sir.
Now, reversal of impairment loss. Reversal of impairment loss. Reversal of impairment loss. On 31st March 20x5. How much year have gone? How much years have gone?
2 years.
4 years. 4 years.
Total 4 years. Total
Yes.
4 years
Yes.
have gone. Total 4 years have gone. So in the question, fair value less cost to disposal was given. In the question, value in use were also given. What is the value of fair value less cost to disposal?
It's at 290.
290. What is the value? What is the value of value in use?
Value
2,12,000.
3,04,000.
Okay.
आप लोग भूल गए क्या? मैं 31st March 20x5 की बात कर रहा हूँ.
Yes, 3,04,000.
What happened? Are you guys not able to understand the concept? Shall I again revise the concept?
No, sir.
No.
It's very clear, sir.
Okay.
I am in silent.
Okay. Recoverable value. What is my recoverable value in this case? Recoverable value क्या होगी? 3,04,000. Higher is 3,04,000. 3,04,000 is the recoverable value. Okay. 3,04,000 is the recoverable value. Now, what is my carrying value? What is my revised? So what is my revised carrying value? This revised carrying value was on 31st March 2003, not on 31st March 2005. So this is my recoverable value. First of all, I need to compute my existing carrying value also, right?
Yes.
करना पड़ेगा नहीं करना पड़ेगा?
Yes.
Computation of carrying value as it 31st March 20x5. Anyone, if you have any doubt why I'm doing this calculation? So other assets, what is the value of the other assets? The value of the other assets are 212.
2,12,000.
So now depreciation for
2 years.
2004 and 2005, 2 years, right?
32,000.
So what is the depreciation for 2 years?
32,000.
No, sir. Because the carrying in years.
2,12,000 divided by 18.
So
It will be 2,12,000 divided by remaining life, that is 18 years, amounting to 22,555 rupees.
Absolutely, yes. This concept I am teaching you since last 10 classes. Please compute depreciation always on the basis of your carrying value divided by remaining useful life. So the carrying value on 31st March, other assets carrying value at 31st March 20x3. This was the carrying value. So now I need to depreciate. What is the value of the depreciation? This divide by 18 remaining life. Multiply by, since 2 years are there, since it is 2 years, so multiply by what? This divide by 18 multiply by 2. right? I hope the number are right. 23,556.
Correct.
Yes. So now I got the carrying value as at 31st March 20x5. What is the recoverable value on 31st March 20x5? What is the recoverable value? 3,04,000. So tell me, how much should I reverse? 3,04,000 minus 188, or I should check the calculation?
Sir, we have to check the calculation without impairment.
So how much I need to reverse? So I need to check the number, that how much I can reverse. Okay, what should be the limit? Okay, and how can I check the limit? I have to use this table. Right? After reversal of impairment loss. So just hang on. After reversal of impairment loss, the revised carrying value should be lower of recoverable value. What is the recoverable value? 3,04,000.
4,000.
What is your carrying value had the asset never been impaired? तो carrying value क्या होती अगर ये asset कभी भी impair नहीं होता तो?
1,88,444.
2,56,000, sir.
So 3 lakh. So what was the actual value? 3,20,000 minus 4 year. देखो इस क्वेश्चन में भी एक्यूमुलेटेड डेप्रिसिएशन 4 साल का ही है, मेरे को नीचे वाली लाइन चेंज नहीं करनी पड़ेगी, राइट?
Yes, sir.
320 divide by 20 multiply by 4, correct? 2,56,000. आप में से किसी को कोई डाउट यहाँ पे? Anyone have any doubt? Any doubt on these two numbers?
No.
Yeah. So after reversal of impairment loss, what should be my revised carrying value? My revised carrying value should be at 31st March 20x5. What should be my revised carrying value? My revised carrying value should be how much? What is lower?
2,56,000.
2,56,000. So how much I need to reverse now? How much I need to reverse now?
2,12,000.
2,12,000.
2,07,000 minus 1,04,444.
Sanjay, tell me what is your existing carrying value? What is your existing carrying value at 31st March 20x5? 188,444, right?
1,884, yes.
आप
1,884.
2 लाख संजय 2,12,000 जो वैल्यू थी वो कब थी? वो 31st मार्च 2003 को थी.
Yes, yes.
राइट? अब आप रिवर्सल कब कर रहे हो?
31st March X5.
31st मार्च 5 पे कर रहे हो ना? तो 3 और 5 के बीच में कितना टाइम बीत गया?
2 years.
आपकी 2 साल की आर्टिकलशिप खत्म हो गई, राइट? तो 2003 में on 31st March 2003, your articleship was 1 year articleship was completed, and you got an assignment that your chartered accountant, your boss, your principal told you, Sanjay, can you please go and finalize the balance sheet? You went to the company, you finalized the balance sheet, and you have recorded an impairment loss of 1,56,000, right? Because the recoverable value was 2,12,000. You have wiped off the goodwill, and you have also charged 76,000 on the other asset. Okay, so 2,12,000 was on 31st March 2003, and that point of time you completed 1 year of articleship. You came to 31st March 2004. Again, you went to that company for finalizing the balance sheet. You told the company, please depreciate. The company asked how much? You told 2,12,000 was the opening carrying value. Divide by 18 years. This will give you this year depreciation. Right, Sanjay?
Right, yes.
So then you get an existing carrying, then you get a carrying value. Then you again, after completing 3rd year articleship, your boss requested, Sanjay, can you please finalize the balance sheet for this year also? You went there. And again, you told management, please depreciate. And when they depreciated, you got a carrying value in the balance sheet at 188,444. And since you are a chartered accountant, you told them, "Ki boss, there are favorable indicator because your license has resumed. So you have to check the recoverable value also." So again, they have checked the recoverable value, right? They said 3,04,000. So they told, should we 188 and 3,04,000, the differential, should we take it in the asset? You told no. You need to compute how much you can reverse, right? So management is asking Sanjay that, sir, how can we reverse? How can we compute? So Sanjay told, see, you have computed a recoverable value. Management said yes. How much is the amount? 3,04,000. Then Sanjay told, tell me one thing. If this asset will never be impaired in 2002, 2003, what would have been the carrying value today? Management told, very simple, sir. 3,20,000 was the original value. If there was no impairment, no change in life, every year we have to charge 16,000 rupees of depreciation. Since it is 4 years which have gone, so in the 4 year we would have charged 64,000 rupees of depreciation. So 320 minus 64,000, 2,56,000. Sanjay said, very good. Then Sanjay asked, now tell me one thing. What is lower? 3,04,000 is lower or 2,56,000 is lower? Management source told, sir, 2,56,000. Then Sanjay told, after reversal of impairment loss, your revised carrying value in the balance sheet on 31st March 2005 is 2,56,000. Then management told, okay, sir, it means I need to reverse. It means I need to reverse an impairment loss only to the extent of 256 minus 188,444. It means I have to debit my asset by 67,556 and I credit my P&L by 67,556. And Sanjay told, बिल्कुल सही पकड़े हैं. Yes, exactly. This is the amount which you have to reverse. Right? So what is the accounting entry? What is the accounting entry, Sanjay? Asset account debit to
Impairment
what?
loss reversal.
To reversal of impairment loss. Rahul is saying, sir, should we not reverse this impairment loss in goodwill also? No. Reversal of impairment loss on goodwill is what? Is what?
Not to be reversed.
Reversal of impairment loss on goodwill is not allowed. Not allowed. Yes. So to reversal of impairment loss on other asset, how much is the amount? दोस्तों अमाउंट कितना होगा? 2,56,000
67,556
minus 188,444. Anyone who has not been able to understand the concept of reversal of impairment loss? 5 बार तो मैं बोल चुका हूं, 5 बार मैं टेबल भी लिख चुका हूं. So आपको याद हुआ नहीं हुआ?
Yes, sir.
सब प्रिंट हो गया सर, छप गया.
सब क्लियर हो गया? Clear with clarity, clear with confidentiality, clear with transparency, clear with visibility. सब clear हो गया?
Yes sir.
Clear.
Yes, sir.
Absolutely clear in mind?
Yes, sir.
Absolutely.
Very good. Very good, guys. Very good. Thank you
Sir.
so much. Now
Sir.
we will do one more question and then we will do just one revision and then we will wind up the session. Yes, Saminathan.
Sir, what is the ask of the question, sir? Whether it's a cost model or revaluation model? I did not.
The question, if the question is silent, you should consider that as a cost model.
Right, sir. Okay, thank you.
Right? If the question is silent, you also need to be silent. Okay? Clear?
Okay.
So don't assume revaluation model if the question is silent. So this is the thumb rule. But still, if you are like Khatron ke Khiladi, then and you want to opt for revaluation model, then please write. Since the question is silent and hence we have opted this as a revaluation model. We have considered this. We are solving the question considering to opt it as a revaluation. But but my advice and the expectation is assume this as a cost model, right? Clear?
Right, sir. If already in the question there is a revaluation reserve is so and so, then we can show that this revaluation.
Then question has given you enough indication.
Yes, sir.
Right. अगर आप फिर भी नहीं कर रहे तो प्रॉब्लम है, राइट? अगर क्वेश्चन ने आपको बहुत सारे इंडिकेशन दे दिए, स्टिल यू आर नॉट डूइंग, then there is a problem in you, not in the examiner, right? Okay, fair? Clear?
Yes, sir. Fair.
Shall we do one more question?
Yes, please, sir.
Yes.
Okay, so let me open a question. Yes. Question number. Yes. So this is again a question from Word file. I hope the Word file is visible.
Yes, visible.
Yes, sir.
On 31st March 20X1, Vision Limited acquired 80% of the equity share of Mission Limited for 190 million. 80% equity share of Mission for 190 million means 19 CR. Means the value is 19 crore. The fair value of the net assets of Mission Limited that were included in the consolidated balance sheet of Vision Limited at 31st March 20X1 were 200 million. Okay. Just a minute. I hope Word file is visible.
Yes, sir.
Okay. Yes. So 80% shares were acquired for 19 CR. Fair value is 200 million. It is the group policy to value the NCI in subsidiaries. It is the group policy to value the NCI in subsidiaries at the date of acquisition at its proportionate share of fair value of subsidiaries' identifiable net assets. So it is talking about computation of non-controlling interest, right? On 31st March 2004, Vision Limited carried out its annual review of the goodwill on consolidation of Mission Limited and found evidence of impairment. No impairment had been evident when the reviews were carried out at 31st March 2 and 31st March 3. Means in the first 2 years, there was no impairment. At the completion of third year of articleship, you got the impairment assessment. So even you must be thinking now why this impairment is happening at the end of third year of articleship, right? Even in that case also it was happening at the third year of articleship. In this case also.
Yes. Yes.
Right?
To extend the working hours, working days.
Okay. No impairment had been evident when the reviews were carried out at 31st March 2 and 31st March 3. The review involved allocating the asset of Mission Limited into 3 cash generating units. Unit A, Unit B, Unit C. And computing the value in use of each unit. The carrying values of the individual unit before any impairment adjustments are given below. So 3 CGU are there. Okay. 3 CGU are there. And the values are given. Intangible asset, property, plant and equipment, current asset. Unit A, Unit B, Unit C. 3 values are given. Okay. These are the carrying value. And value in use is also given. So value in use is 180, 66, 104. So tell me one thing. The carrying value of this cash generating units is 170. And the value in use is 180. Is there any impairment in CGU A?
No.
Yeah?
No, yes. Right.
No impairment? Of course, no impairment. In the second case, what is the carrying value in the second case?
90.
90.
Right.
What is the value in use? What is the recoverable value?
66.
60. Is there any impairment?
Yes.
Yes, sir. 24.
How much is the impairment?
24.
24 is the impairment, right? 24 is the impairment. Now the unit number C. In case of unit C, what is the carrying value? 100.
100.
What is the value in use and recoverable value?
104.
Is there any impairment?
No.
There is no impairment, right? There is no. So friends, we understood for unit A, unit C, no impairment. Unit B, there is an impairment, right? It was not possible to meaningfully allocate the goodwill on consolidation to the individual CGU, but all the other net assets of Mission Limited are allocated in the table shown above. It was not possible to allocate the goodwill to the individual CGU, but all the other net assets of Mission Limited are allocated in the table shown above. These current assets, right? Current asset, intangible asset, PP. So these are allocated to the units, but it is saying that it is not possible to allocate the goodwill to the individual CGU. The intangible asset of Mission Limited have no ascertainable market value, but all the current assets have a market value that is at least equal to the carrying value. So they are saying intangible asset की कोई market नहीं है, कोई ascertainable market value नहीं है, but all the current assets have a market value which is equivalent to the carrying value. What does it mean? What does it mean? इस लाइन का मतलब क्या है?
There is no impairment loss.
सर इंक्लूड करता है वो जितना प्राइस में होता है उतने तक में।
अरे इसका मतलब क्या है? सो करंट एसेट्स लिखा है, करंट एसेट्स के बारे में आपको बताया, आपको दो बातें बताई। आपको एक बात बताई, इंटेंजिबल एसेट की एसर्टेनेबल मार्केट वैल्यू नहीं है, ठीक है, लेकिन जो करंट एसेट्स हैं उनकी जो कैरिंग वैल्यू है वही मार्केट वैल्यू है। तो ये इंडिकेट क्या करना चाहता है?
No impairment loss.
No impairment loss. Going by individually current asset, there is no impairment loss. Going at an individual level, there is no impairment loss. Means, thereby it means we should not allocate any impairment loss in unit number B to the current asset. Right?
Right.
यही मतलब है. You remember the concept which I have told you?
Yes.
एक मैंने आपको केस नंबर 2 बताया था जिसमें बिल्डिंग was there and the
Yes.
carrying value was 30 million and the recoverable value was 32 million. We haven't allocated any impairment loss on that building.
Yes. Yes. We have not.
मुझे नंबर याद है वो.
I remember.
Right?
Yes.
Yes. Okay. So it is again then saying that the intangible, okay, the value in use of Mission Limited as a single cash generating unit is 350 million. The value in use of Mission Limited as a single cash generating unit. The value in use of the company is given 350 million. Discuss and compute the impairment of goodwill as per Ind AS 36. Now friends, in this case, you haven't given the value of the goodwill. How will you compute the value of the goodwill? Tell. And the question is asking about the impairment on goodwill. Tell me, how will you compute the impairment on goodwill?
Yes, sir. Actually the asset, net asset is given is 200 million. This company is purchased is 80% of the stake. Then we need to find out what is the NCI. The remaining portion we need to compare with 190 with that after NCI. We have to check any goodwill is there or not.
Okay. So question number 4 of word file. Question number 4, word file. Question 4 of word file. Anyone who want to explain how we can compute goodwill? Anyone?
Sir, 80% of 200 million, and it will be minus 190 minus 160 will be goodwill.
Calculation of goodwill. Okay. Calculation of goodwill on acquisition. What is the purchase consideration? Can anyone help me? Which the company is paid?
190 million.
190 million.
This was the purchase consideration, 190 million. It was purchased for 190 million. Okay. So purchase consideration is 190 million. Very good. What is the value of the net assets acquired? Net assets acquired.
200 million.
Huh?
200.
Net asset acquired for own share. What is the share? What is the own share? Means 20% is NCI. So what is the own share?
80%.
200 million multiplied by 80%, right? ठीक है ना?
Yes, sir.
What is my goodwill? What is the goodwill?
30.
Goodwill is 30. Goodwill is 30. Anyone who has not understood how this goodwill is computed? Anyone? Please raise your hand or please let me know. Yes? Anyone? Is it clear, Akshay?
Yes, sir. Very clear.
So, what should we do now? So we have computed the goodwill, right? And the goodwill will become part of the cash generating unit. This is what we discussed. But in the question said that the goodwill cannot be allocated to any cash generating unit meaningfully, right? And the question is asking impairment loss on goodwill. So how will we do that? Tell me. So the goodwill can only be reviewed for impairment as a part of CGU to which it relates. Since here the goodwill cannot be allocated to the unit, the impairment review is in two parts. How we will do the impairment review? Unit number A and C, the first unit and the last unit, that are having more than their carrying values. Their value in use is more than the carrying value, right? However, unit B, CGU B, they have the recoverable value less than the carrying value. It means, what is the impairment in unit B?
24 million.
24 million. 24 million, right? So 24 million is the impairment loss of unit B. Correct? So what is the revised carrying value of unit B? What is the revised carrying value of unit B?
66.
66. Okay. So let's write down the values of the units. Okay. CGU. So revise carrying value of CGUs. कौन सी यूनिट थी? CGU A, B, C, right? CGU A, CGU B, CGU C. These are the three ones, right? And what were the assets? Intangible asset, PPE, and the current assets. Total recoverable value, the values given was 1 minute.
30, 80, 80.
30, 80, 60. 30, 80, 60. 30, 80, 60 for CGUA.
30, 80, 80.
80.
60.
Just a minute. 30, 80, 60. Yes. 30, 80, 60, right?
Yes.
For CGUA. And for CGUB, For CGUB 10, 50, 30. 10, 50, 30. For CGUC 0, 60, 40. 0, 60, 40. These are the values given in the question, right? I'm not doing any calculation. ये question में दिया है. This is given in the question. What is the recoverable value given in the question? 180, 66, 104. 180, 66, 104. Okay. 180, 66, 104. Now, impairment loss. Impairment loss. Impairment loss? No. No.
No.
What about B? How much impairment
24.
loss? 24.
24.
How much impairment loss? No.
Nil.
Nil. Right? Nil. Okay. So now this 24 has to be allocated in which ratio? In CGUB. So revise carrying value. These are the carrying values. Now I need to compute revise carrying. CGUA will be same. CGUA will be same, right?
Yes, sir.
What about CGUB? This 24 has to be allocated in what ratio? 24 has to be allocated in the ratio of 10:50, right?
5:30, yes, sir.
So 24 divided by 6, 4, 4. So here it is 10 minus 4, 10 minus 4 and 50 minus 20, 66. Are you okay with this calculation?
Yes, sir.
Yes.
We haven't allocated any impairment loss to current assets. Why?
There is no impairment loss on current assets.
Because question was saying that the current assets market value is equal to the carrying value, means there is no impairment at an individual level. This is what question is told, right? That is why we have not allocated any impairment loss on current assets. Clear?
Yes, sir. Clear, sir.
Yes, sir.
Now in this question you have computed a goodwill. Okay. And in this question one more information is given in the question. You know what is the information which is given in the question? The recoverable value of the company is given. The recoverable value of the company is given. Company means recoverable value of the entire mission limited is given. And what is this value? The value is given as 350 million. 350 million. Recoverable. And the ask of the question is computation of impairment of goodwill. Computation of impairment of goodwill. Right? That was the ask of the question. That how will you compute the impairment on goodwill? Okay. So tell me, how should we allocate the impairment loss on goodwill? Tell me. कैसे करेंगे?
Carrying value recovery.
While you guys haven't covered business combination as of now, right? So business combination is yet to be covered. Okay. So this question, while this is a kind of a very complex question, so let me give you one concept which you are already aware, right? Which you are already aware. And what is the concept? What is the concept? The concept is, friends, your NCI, whenever you purchase a company, whatever you are paying, right? Whatever you are paying, your purchase consideration, okay? If you are having 100% stake, then your purchase consideration minus net asset is equal to goodwill, okay? For example, you are paying 200 rupees, you are getting an asset value of 180 rupees. So the remaining will be goodwill. The remaining will be goodwill. Okay. So friends, the remaining will be goodwill. Friends, what happens when you are paying a consideration of 200 rupees and you are only acquiring 80%? So means when you are only acquiring 20%, 80%, you will become the parent because you have acquired 80%. So in consolidation, how you will do the consolidation? Is it line by line or only 80% consolidation?
Line by line, sir.
100% or 80%?
100%.
Line by line, 100% consolidation. So tell me one thing, you are doing line by line consolidation. Don't you think you are adding 100% of the value of the subsidiary asset to the parent asset? Don't you think the owner, the 20% owner are separate? The 20% owner are NCI?
Yes.
Yeah. So
Minority interest.
minority interest, so that is called as a non-controlling interest in Ind AS.
Okay.
So friends, that is why while you are adding line by line 100% of the assets and liabilities, but you are also recognizing a liability towards non-controlling interest, right? जैसे मान लो एक कंपनी में 100 रुपए है and Sanjay is 20% shareholder, I am 80% shareholder. Okay, I am the parent, I am the majority owner, Sanjay is minority owner. So 100 रुपीज उस कंपनी में है, मैंने उस पूरे 100 रुपीज को अपने पास ले लिया, मैंने अपनी गुल्लक में डाल लिया. 100 rupees I have packed, I have kept in my wallet. So what should I say? If 100 rupees I have kept in my wallet and I am 80% owner, what should I say?
20 is investment.
20 is my liability. 100 is my asset and 20 is my
Liability.
सही है ना संजय?
Yes, sir.
So you will come to me na, you
Minority.
will ask na, sir, please can you return my 20 rupees? Sir, I think because I am your teacher, you will not say that, sir, you have done a fraud. You will very sincerely tell me, sir, I think you have, mistakenly collect entire 100 rupees. Sir, 20 rupees belongs to
It
me.
includes my 20 rupees.
It includes my 20 rupees. So I will, while as per rule, I will pick entire 100 rupee note because I cannot tear that note. I will pick entire 100 rupee note, but I will create a liability of 20 rupee towards you. Is that clear? Is that clear?
Yes.
Yeah.
Clear.
So likewise, friends, whenever you are acquiring a company on a partial stake model, in that case, when you recognize the goodwill for a company, while I have given you a simple formula for goodwill, right? But the actual formula for goodwill in case of a business acquisition, you know how you will compute the goodwill? Purchase consideration 190, right? Purchase consideration 190. Net assets acquired 200. So you have paid 190 and there is a liability of NCI also. There is a NCI also. For number one, you have paid 190 and you have also assumed a liability. What liability you have assumed? What liability you have assumed?
Non-controlling interest.
Non-controlling interest liability you have assumed. Non-controlling interest liability you have assumed. So NCI you will also recognize at fair value. For example, if you are paying 190 for 80% stake, what is the value of 20% stake? Tell me. This multiply by 20%. So let's say if this is 80% value, then what is the value of 20%? 47.5. Is that clear? Is that clear? NCI at fair value. आपने कितने परसेंट स्टेक के लिए परचेज कंसिडरेशन पे किया है?
80%.
So what is the fair value of that company? What is the fair value of that company at 100%? कितनी fair value होगी कंपनी की? कितनी होगी कंपनी की फेयर वैल्यू? इफ यू हैव पेड 190 फॉर 80%, व्हाट इज द वैल्यू फॉर 100%? बताओ.
238.
237.5. So if 237.5 is the value of the total value of the company, what is the 20% value, which is outsider?
Yeah, 47.5.
47.5. This is how you will compute your NCI at fair value. Not to worry. You will understand this concept in detail at the time of Ind AS 103 business combination. Right? You will discuss this in detail at the time of business combination. Not to worry. Okay? But have you understood as of now what is the value of the goodwill? How we will compute the value of the goodwill as per Ind AS 103? Yes? Yes or
Yes,
no?
sir. Yes,
So
sir.
now I have the recoverable value of the company, I have a goodwill value, and ask of the question is to compute the impairment loss on goodwill, right? So computation of impairment loss on goodwill. Computation of impairment loss on goodwill, right? So first of all, what I have in the company, what I have particulars. So what is there in the company? Number one, goodwill. Then CGU A, CGU B, CGU C. These are the assets of the company, yes or no?
Yes, sir.
Yes.
These are the assets of the company, yes. What is the value of these assets? What is the value of these assets? Goodwill 37.5. Carrying value क्या है? CGU A की carrying value क्या है? 170.
170.
CGU B 90. CGU C 100. These are the carrying value, yes or no? Carrying value तो यही है ना?
There is
Sir,
revised carrying value also.
Yes, I'm so just hold on. I'm going in the next step. But will you take the old carrying value or will you take the revised carrying value after allocation of impairment in the cash generating unit?
Sir, we need to take the order revised carrying value, sir.
Revised carrying value. You need to take the revised carrying value, right? You need to take the revised carrying value. So what is the revised carrying value? What is the revised carrying value? Revised carrying value is 66.
6600.
Now you got the value of the company. Now you got the, what is the value of the company? What is the revised carrying value of the company? 373. Now, what is the recoverable value of the company?
350.
What is the recoverable value of the company?
350 million.
350.
What is the impairment loss?
No, nothing.
23.5. 373.
What is the impairment
Sorry.
loss?
Yeah. Yes. I got it.
Neha, what is the impairment loss? क्या होगा impairment loss? कह रहे nothing.
24.
23.5.
What is my impairment loss? 23.5.
₹23 sir ji.
Guys, are you clear? So first, what I have done? First, I have computed impairment loss on the CGUs, right? This goodwill was not allocated to any CGU, so goodwill is a separate line item. Okay, it's a separate asset. Once I have computed the revised carrying value of the cash generating unit, and once I have computed the value of the goodwill, I have compared the total value of the total carrying value of the company with the recoverable value of the company. I found 23.5 as a goodwill. So friends, what is my impairment loss on goodwill? कैसे allocate करूं? How this 23.5 has to be allocated?
37.5.
Sir, we can fully allocate to because goodwill is 37.5. 23.5.
Fully allocate to goodwill. Fully allocate to goodwill. Remaining amount. Where I have allocated the remaining amount?
Sir, we cannot allocate to anyone else because only we
cannot allocate. There is no remaining amount. There is no remaining. Right? This is the value. Okay. Is that clear? So the only difficulty in this question was, number one, if you understood the concept, for example, the question was telling you bar. What the question was telling you? The question was telling you goodwill cannot be allocated. So don't allocate the goodwill. Number two, The question was telling you current asset is already at recoverable value. So don't allocate the impairment loss on current asset. That was a too small aspect. Then on CGU and CGUC, there was no impairment. On CGUB, there was impairment. Whatever impairment was there, it was allocated between intangible asset and PP&E, right? So this is how you have computed the revised carrying value of CGU A, B, and C. Then the question has given you some facts, which once you completed Ind AS 103, it is your just chutki ka kaam. It is just a fraction of second work. Okay? So once you have done that, you need to compute a goodwill. How will you compute a goodwill? So your purchase consideration paid, NCI at fair value minus net assets acquired is give you goodwill. So once you have the goodwill, you have the revised carrying value, you will get a value. Okay. And when you compute that value with the recoverable value of the organization, you will get an impairment loss. And then you need to allocate the impairment loss in all these assets, right? First, you need to allocate the impairment loss on goodwill. If it is over and above goodwill, then you need to allocate in the ratio of CGU A, B, and C, right? This is how you need to allocate. Is that clear? Is that clear to everyone? This is something which was different in this question, and hence I have covered this question. My dear friends, my dear future chartered accountants, I hope you have enjoyed thoroughly these 3 classes on Ind AS 36 impairment of assets. I hope you have enjoyed it thoroughly. Yes or no?
Yes, sir.
Yes.
Now the time has come for say goodbye to Ind AS 36 from the learning perspective and revise from the earning perspective, right? So you need to revise this standard. So friends, we discussed the objective and scope of Ind AS 36. We discussed that first you need to identify an asset that may be impaired, right? And
Yes,
if it is impaired, if indicator is there, you need to estimate the recoverable amount, and then you need to measure recoverable amount, which is higher of fair value less cost to sell and value in use, right? Then we need to discuss, we have discussed that this impairment loss has to be recognized in P&L, but if the impairment loss is on an asset where revaluation model is opted, then whatever is charged to P&L, to that extent it will be reversed. And if the increase, so basically if it is on a revaluation model, then there is an impairment loss. You need to check if the revaluation surplus exists, adjust from the revaluation surplus. If impairment loss is more than the revaluation surplus, the excess part will go to P&L. Okay. So how to measure? If your carrying value is higher than the recoverable value, then carrying value minus recoverable value is your impairment loss. Concept of CGU we have discussed. Allocation of impairment loss on CGU we have discussed, first to goodwill, then to the other asset on a pro rata basis. If the other asset recoverable value is more than the allocated value, right? If the other asset has a recoverable value which is more, then you cannot allocate impairment loss more than the impairment loss which is coming individually. Okay. So this is what we discussed. Reversal of impairment loss, we discussed that if there is a favorable indicator, you can reverse, and the concept of corporate assets we have discussed. In case of reversal of impairment loss, after reversal, your revised carrying value should not be greater than, should not be more than, lower of recoverable value, and had the asset never been impaired, then what should be the carrying value? And friends, we discussed the disclosure. So disclosure requirement not necessary, and we discussed 3 assets also where the impairment testing is mandatory. Okay. Thank you so much, guys. I hope you have enjoyed the 3 days session on Ind AS 36 impairment of asset thoroughly. In these 3 days, we have solved more than 10 questions, right? With 3 questions from the Word file, which are the complex ones, right? And the other question from ICAI study material, along with my multiple examples on every concept, right? Have you enjoyed the session thoroughly?
Yes, sir.
yes, sir.
Yes.
Yes, sir.
Sir,
Yes.
sir, in the previous year, there was a concept of practice manual from the institute, which gave us a question bank about all these papers. I think it has been removed. So, what question bank would you recommend for this paper FR?
See, if you ask me, so I can tell you the ICAI study material. Okay. the RTP, past examination questions, that is more than sufficient if you ask me, if you understood the concept. If when I was a student, I have solved all the questions from ICAI study material, that's all. Even I haven't covered RTP at my point of time, but I will not say to you this thing. I will say that please solve all the RTPs, okay, all these study material examples, okay. So that will be more than sufficient in my. Okay. And I will check with Board of Studies of ICAI. If they will be releasing any question bank, then I will let you know, right? So Ajit ji, are you there? अजीत जी एक बार आप चेक कर लेना. सो व्हाट अक्षय इज सेइंग, देयर वाज अ क्वेश्चन बैंक, पहले कोई क्वेश्चन बैंक था जो अब हटा दिया गया है. एक
प्रैक्टिस
बार
मैनुअल के नाम से आता था.
सॉरी
क्या सर?
प्रैक्टिस मैनुअल के नाम से पहले आता था.
प्रैक्टिस मैनुअल.
प्रैक्टिस मैनुअल, यस.
ओके.
एक बार आप अजीत जी आप चेक कर लेना, एंड अक्षय प्रोबेबली इन द नेक्स्ट क्लास वी विल लेट यू नो, और you guys will get a mail for that. Okay.
Actually, students, what do you write in the WhatsApp group?
So Akshay, please write on the WhatsApp group. Probably they will revert to you guys. Okay.
Sir, I'm not joined to this WhatsApp group
1 second. Ashok ji,
currently.
please share the link.
अजीत जी इनको ना WhatsApp ग्रुप में ऐड कर दीजिए.
Sir, share कर रहे हैं link. Student, please join the WhatsApp group. We are sharing the link.
Okay,
Whatever
so they are
student-
sharing the link.
Yes, sir.
You can join with that link. And the last question, yes, Ajit ji.
But students, whatever you face any issue, please write in the WhatsApp group.
So student, what Ajit ji is saying, if you have any issue, please write on the WhatsApp group, right? And the last statement which I want to, know from all of you, whether the concept of impairment of asset is impaired or retained.
It's retained, sir.
Retained, sir.
It's retained.
Retained.
I hope the situation is not like the title of the standard.
ऐसा नहीं है.
No.
Okay, very good. So thank you so much, and stay safe, stay happy, right? And your notes, your class notes, which is Excel file, and the PPT, it will be uploaded today. I will share this with Ajit ji and the Board of Studies today only, right? So it will be get uploaded today. Thank you.
Sir, thank you so much, sir, for your layman illustration and explained the concept in details and taking all the questions. It's really helped, sir, a lot to study
you.
and understand the concept. Thank you so much.
Thank you so much. Any question, Akshay, from your side, or should I conclude?
No.
Thank
Yes,
you
sir,
so
you
much.
can conclude. Yes.
Thank you. Bye-bye. Take care.
Thank you, sir.
Students, we have shared the link. Please join the WhatsApp group.